Hi all, this is Ashish Kyal here from Wave Strategy Advisors. Welcome again to Elliott Wave News channel, and this time again we will be discussing about where Nifty stands as of now and what is the wave pattern which is ongoing. And also one very important aspect that I would like to discuss about is the fractal nature that we are seeing on Nifty, which resembles exactly like a previous pattern that we saw a few weeks back. So it's a classical example of a fractal nature. So what is a fractal nature is prices tend to repeat a similar pattern at different degrees of time and scale, and this similarity of the pattern is because of the fractal nature. So a classical example is a leaf. If you take a leaf and observe all the veins on the leaf, and if you probably look at a small portion of it and again cut it, you are going to see a similar kind of a formation over and again at a smallest degree of the leaf, and which actually represents nothing but the entire big leaf. So that is nothing but a fractal nature in a very raw way, which I have explained. And similarly, you can see this fractal nature across the universe. You are able to see this within the human DNA to the universe and galaxies. So something like this, which is so fundamental to the nature, if it is existing everywhere across, which means it has to exist in stock market, because stock market movement is again nothing but a collective thought process and psychology and perception about the future, where majorities are trading in order in anticipation of what is going to happen in future. So that is again going to be reflected, and that human emotions results into the development of repeatable patterns across the different time frame, which is known as a fractal nature. So one such classical example we have seen in the recent times on Nifty, and let me open up the chart and discuss that fractal nature. So before I move on further, it has been a very volatile week. Nifty flirted around 8715 levels, which was the important support. It just flirted around those levels for a single day and reversed back from there very sharply on the very next day. And today it was like all over the places by Nifty moving sharply higher during the opening session on the back of sharp rally seen in HDFC Bank, driven by the news again. However, prices came lower towards the level where it was supposed to be before the event. So it retested 820 levels time and again. So if you remember, 820 is the level which was tested so many times a few days back for, and prices were constantly failing to break above that level and has been retracing down on the downside. However, this time there was a breakout above 8820. Nifty went towards 8900 on the opening session, but later it has been constantly retesting that zone, which is now acting as a support. So 8810, 8820, which was acting as a strong resistance before, this zone is now acting as a very strong support. So this concept is known as a polarity reversal. And there is a possibility, since the fall was limited only to a 1 day or 2 days, there is a high possibility that the fall was only another wave X and the entire pattern has been extending further. So let me open up my chart and explain you over there what is the current wave structure and how we are looking at this wave structure as of now. So this is the screen. If you can check, this is the chart of Nifty from the lows of 7,900. The way it has moved up. First thing is for sure, the entire move on the upside has been in a corrective fashion. It is not impulsive, because if you apply neo wave, which is advanced concept of Elliott wave, we need to see at least one extension within the waves. And if you look at the move from 7,900 to the highs of 8,400, there is not a single extension. So by extension, I mean one of the waves should be at least 1.618 times of wave 1 or fifth if third is extended, but there is no extension, which confirms that the prices are moving on the upside in the form of a corrective pattern. Secondly, if you look at the movement of wave X here, it is very similar to the movement that you can see between these two trend lines again over here. So what I am trying to point out is this pattern is very similar to what you can see over here as well. So this pattern and this pattern are very similar. So such kind of similarity from the channel resistance to the channel support, again in the, I think this was somewhere around in January, when markets broke on the downside, it found very strong support here and it gave a false break. So this was probably a bear trap. It gave a false break and then reversed back sharply on the upside, so towards the channel resistance. Same thing happened this time. Markets were consolidating. It looked like a distribution pattern. However, the fall was limited only to a 1 day. Again, it found a very strong support exactly at the channel, whipsawed around 8715 level, and then again reversed back sharply on the upside. So during such kind of dynamic movements in the market, it is very important to look at this technique of bar technique, and also to always be aware about what is the other probable scenarios that might play out. This will help us to change the stand very quickly, because what has happened after forming wave Y, so this entire up move has been in a double corrective pattern. After forming wave Y, there was expectation that the prices are going to go down sharply, because if it is completing the bigger degree up move here. Nevertheless, it came down, it found very strong support near the lower trend line of the channel and bounced back from there. So this clearly indicates that the down move was again a false move, and as per the fractal nature, this pattern looked very similar to the pattern earlier, which indicated that there is a possibility that we should start seeing an up move again. So going by the fractal logic, if it going to work out exactly the same, then we can expect some strong up move from here on, and this up move can be probably taking the prices back towards the channel resistance. So that's one of the possibility. The next possibility is, since we are moving in a triple corrective pattern now, there is a high probability the third correction pattern is going to form into a triangle, because that is how most of the times the third standard pattern works out. So we formed a diametric pattern in wave W, we formed a complex wave X, then we formed a zigzag pattern in wave Y, again some kind of a complex correction in wave X, which resembled very similar to the previous wave X, and now we are in the third standard correction pattern. The classical thing to note is, this cannot be an impulsive rise, given the fact that prices are perfectly channelized. In case of an impulsive move, we will not see such perfect channelization. So the only pattern where the channelization is allowed is a complex corrective pattern as per NeoWave. So looking at the overall pattern and structure, there is a high chance that the zone of 8810, 8820 is now going to act as a support. So also on the bank Nifty, we have seen a very sharp move on the upside. There was huge buying that was seen across HDFC Bank, and after that the news came out that the FIs have been again entered into a ban limit, but still HDFC Bank has managed to sustain at the higher levels and close. So as long as the gap area of today, I think, is protected, the trend is going to remain positive. What is going to be important now is, if for a negativity to emerge, we need a decisive break below 8700, which was the low in faster time. So unless that happens, we are going to look at it as the third standard pattern which has started. Now this pattern can take the form of a diametric or a zigzag or a triangle or some other pattern which we are not aware as of now. So we have to wait to get clarity on which pattern it is going to form. But nevertheless, what one has to keep in mind is this lower level, which is going to be very important, that has to be protected. And if Nifty manages to sustain above 8820 levels in the coming trading session on Monday, then we might expect the upside push to go on. During such kind of a scenario, the best strategy is to adopt is to buy the stocks that are outperforming, which have been moving higher, and keep observing those stocks, because those are the ones that have been outperforming even when Nifty was correcting. So now, as soon as market has stabilized, we should start seeing outperformance in those kind of stocks. So I think that should be from my side in today's session, and I will appreciate if there is any kind of feedback you would like to, probably any specific topic you would like me to speak up on. I'll be more than happy to do that. And always keep in mind, fractal nature is something very fundamental to the Elliott waves, because Elliott wave is based on the building block for Elliott wave is again fractal nature, Fibonacci. So those are the building blocks for Elliott wave, because what happens on the bigger degree is going to repeat it on the smaller degree as well, and that is what makes the entire wave pattern repeat again and again at different degrees. So what we are seeing again is a classical example of that. Let's see if market behaves as per that fractal nature. The outcome from here on is similar to what we observed after the previous wave X was formed. It's going to be important. Trend is going to be positive for now, and at times it is prudent to change the stand, because if market did not move and break the channel, which means there is some more steam left. That should be it from my side. And I hope you enjoyed the session. Stay tuned at 4 p.m. and you can find this webinar on our website wavesstrategy.com at 5 every Friday. And again, an announcement: we are conducting a training on 18th and 19th March where we will be discussing a lot of these techniques here in Mumbai. So it's a 2 days training where we'll be discussing about Neo Wave, Advanced Elliott Wave, time cycles. I'll be discussing some points about Gann time cycles using square of 9. So it's going to be across the scale that we are going to look at technical analysis in a very different perspective. So in case you are interested for registering for the same, you can please write to us on helpdesk@wavesstrategy.com or contact us on 9920422202. Stay tuned and keep reading the reports, and you'll be able to enjoy uh, more insights into how various techniques can be combined together by looking at the various research reports we publish. Have a wonderful weekend and see you again same time next week on Friday. Thank you.